Navir. So I will take this opportunity to introduce next speaker, CA Hiral Suresh Shah. He is practicing chartered accountant since 2006. Has completed MCom, LLB from Mumbai University. He is DISA qualified and a certificate course from arbitration and conciliation, as well as on concurrent audits of banks from ICAI. He is involved in consultancy and compliance of sales tax, GST, and income tax matters for corporate and non-corporate. Has performed statutory audit, concurrent audit, tax audit, revenue audit, internal audit for various banks and companies. He is also member of committee member of the GSTPAM for the years 11, 12, 12, 13, and 18, 19. A permanent invitee in the managing committee of GSTPM for last couple of years. He is also managing committee member of JCF, Jain Chartered Accountants Federation, chief mentor at the Tax Foundation Academy. He is associated as a regular faculty for different study circles of WRC, and also a faculty at associations like BSc, Dule Tax Practitioners, and it's a long list. So with not taking much time and not extending this, I would welcome Hiral Shah to please take over the charge of the session and please start the session. Thank you so much, Hiral bhai.
Welcome, friends. With a bit of delay, but we will start the impact of GST laws on charitable trust and cooperative housing societies. Friends, what the general notion of the, like is okay, charitable trust, it is carrying on or charitable activities. Therefore, we would not be required to pay any GST on it. Okay, we are doing some charitable activities. We are not doing any kind of business, so GST is not applicable to us. Whereas this understanding is, I would say, incorrect in many fashion, in many manners. That only certain activities are exempt from payment of tax in case of charitable trusts, and there is a different understanding for a cooperative housing society as well. First, let's concentrate on charitable trust, and then we'll go on to cooperative housing society. Again, to have a passing remark on cooperative housing society, people again have a thing कि अरे वो एक सीए को मैंने पूछा था 7,500 रुपए तक मेंटेनेंस है तो कोई जीएसटी नहीं लगता है, तो कोई चिंता ही नहीं है हमें, हमारा तो सबका मेंटेनेंस कम ही है कि हम फॉर एग्जांपल इस एरिया में है कि हमारा भले बड़ा सोसाइटी है लेकिन हमारा कल्याण में है सोसाइटी, इतना हमको टैक्सेस और वो सब नहीं आता, तो हमको रजिस्ट्रेशन की कोई जरूरत नहीं है. There are certain well-found facts and certain myths. We will discuss both of them at length, at whichever manner possible. To the best of my ability, I will try to convey the thing. So, impact of GST laws on charitable trust. So, the first thing which comes in the newspaper headlines, कि एडवांस AAR आ गया है, एडवांस रूलिंग अथॉरिटी, कि अभी हमको कोई भी चैरिटेबल ट्रस्ट है, रोटरी क्लब के केस में आया, और यू टेक फॉर लायंस क्लब कोथरूड पुणे, तो judgments have come, so there is no requirement for payment of GST at all. However, all these things, whether they are the understanding is correct, understanding is incorrect, that will have to be tested in the court of law. Let's see. As of now, I will, all my further analysis and further discussion would be on the assumption that GST law, what it says, I am not contradicting any authority in terms of it is liable, not liable. I'm not going into that. Ignoring the ARs in case of Rotary Club or Lions Club Kothurud Pune, we will go ahead. Definitions. Now, these certain definitions that we see as per the GST Act, these the understanding of these definitions would be common for charitable trust as well as society, both taken together. So our first matter would come to the definition of a person. Who is a person as defined under the GST Act? Section 284 has an elaborate definition. It is an inclusive definition which says individuals, HUFs, company, firm, LLP, AOP. AOP is a factor which we have to consider. AOP, BOI. Then there is cooperative society. It has been categorically included within the definition of a person. Then you have government also, which is included, and the next which is included is trust. They are very clear that a trust is also a person within the definition of the CGST Act 2017. Section 2 subsection 84 is very clear for that, that trust, cooperative society, both are included herein. So this definition includes both our aspects which are to be studied today. Then, okay, chalo, person included. So now, next part which we come down to is business. Whether uh, they are carrying out business or not. So, business also has been defined under section 2, subsection 17 of the Act, which says that any trade, commerce, manufacture, profession, vocation, adventure, major, or any similar activities, whether or not for a pecuniary benefit. See, this is very important that we need to see the whether benefit is there or benefit is not there. Still, it will be considered as business. Then the definition goes further that any activity ancillary or incidental to, whether the frequency is there or not, the volume is there or not, supply or acquisition of goods including capital goods. So all these things. Now, provision by a club or association or society or any such body for subscription or any other consideration of the facilities or benefits to its members. So the definition itself makes it very, very clear that any kind of provision made by any club, association, society has for the benefit of its members. If it is, even if it is for its members. So, at times we go back to the earlier judgments saying कि नहीं ये members dual concept नहीं है, nothing doing. Here the act is very clear, and again this definition is inclusive. यानी ये चीजें तो include होगी ही, इसके अलावा दूसरी भी include होगी, तो वो हमें करना है. So this is how we go ahead with things. Okay, services supplied. So according to me, okay, person definition, it covers these things. Business definition also covers. Then if we go to the definition of consideration under section 231 of the CGST Act, it defines consideration in relation to the supply of goods or services or both. Again, the inclusive definition. It says any payment made or to be made, whether in money or otherwise, in respect of or in response to or for the inducement of the supply of goods or services or both, whether by the recipient or by any other person, but shall not include any subsidy given by the central or the state government. So here if we see, when we consider a charitable trust or a cooperative society, both. Say a cooperative society being a person as defined above provides services to its members in the form of facilities or benefits to its members. So it is within the course of business for a consideration. Yes, consideration is going to the society, or hence it is considered as a supply. Okay, then the definition of supply, it is a very wide definition which is there under section 7 of the CGST Act, which considers, according to me, it considers everything under the sky. everything under the sky is considered as supply. And however, there are certain activities which are specified as they would not be considered as supply. So the act is very clear that everything is supply except 1, 2, 3, 4. Whichever they want to exclude, they are excluding. Which they don't want to exclude, they have kept as it is. So that takes care of the basic definitions which would be relevant for the for the charitable trust per se. Now, what is the criteria when we say, okay, charitable trust, the activities are taxable or exempt? So what is the basic criteria when we would say that the charitable trust is exempt from tax or taxable? Now, first and foremost, a charitable trust, how is it defined? It is defined as to be exempt from tax. It has to be registered under Section 12AA of the Income Tax Act 1961. Now, the registration portion and everything has been taken by Pankaj by in the earlier session. However, it is very much relevant that the trust has to be registered under the Income Tax Act. They have strictly wherein okay, whether the person whether the trust is a charitable trust or not, let Income Tax Act take care of it. Hence, you have to be doubly careful over here when Pankaj Bhai gave the consequences of the registration being cancelled. Here you can have another consequence and another implication wherein your GST activities, the activities which are going to become exempt under the GST Act, would also become taxable if the condition of registration has not been fulfilled. So another word of caution, taking it back to the earlier lecture. Now, so the registration under Section 12AA of the Income Tax Act done, well and good. Now, the other condition, see, it is and. I have very specifically mentioned it as and. Services must be uh, provided. Services provided must be charitable activities as defined under the Income Tax Act. Now, what is defined under the under the GST Act? What services are defined as being charitable activities? So now we need to have a look at that. Activities covered under the criteria for exemption. So it is very categorically clear that only these activities, considering the income tax registration plus these activities, then it would not be it would be completely exempt from GST and not liable for GST. What are the activities which are covered under the criteria? Public health services such as counseling of terminally ill persons or counseling of physically disabled, counseling for people affected with HIV or AIDS, counseling of persons addicted to narcotic drugs or alcohol. Okay, they have this public health services, then promotion of religion, spirituality, yoga. See, these criteria for exemption are there, but they are very clear for that at, at least two criteria have to be fulfilled. If one criteria is fulfilled, then no, it is not exempt from GST. So normally what it is read as, okay, first point, fine. अरे religion, promotion of religion आ गया तो सारे religious charitable trust आ गए आपके exemption में. No, that is not the case. It is at least two criteria have to be fulfilled. So what first was public health services, which are also again subdivided into activities, specific activities. Then promotion of religion, spirituality, yoga. Yoga has gained more prominence these days under the COVID-19 era. So then spreading public awareness on health, family planning, or prevention of HIV infection. Okay, so it is somewhat related to your first activity itself, But first activity was the health services as such. Here even public awareness about that would also fall into the exemption criteria. Promotion of educational programs or skill development related to physically or mentally abused persons, prisoners, orphaned, homeless, or abandoned children, and rural area residents over the age of 65. Okay, again, looking at the social economic agenda of the government, it is certain skill development and education programs are also put under the exemption list for the charitable trusts. Charitable services to preserve the environment, watershed areas, forest, wildlife. So again, environment has also been considered over here. So those activities would also fall into the exemption criteria. So out of the 5 points as narrated, if 2 points are considered, then it is exempt. The activities of the charitable trust or NGO is exempt if at least two criteria are fulfilled. So it is qua the activity. It is not qua the trust. One is that the trust has to be registered, and the second should be the activity. What is the activity? What is the applicability of GST with respect to donations received? So here we studied. Okay, it is registered. These are the activities which are not to be considered as activities liable for GST. Then a simple question comes into mind that okay, if the charitable institution is receiving any donations, so that donations would also count as some supply. So the answer to that would be no. Donations received as such would not constitute taxable event under GST, as receipt from donations will not satisfy business definition under GST Act, as there is no element of supply of services embedded in it. आप डोनेशन दे रहे हो तो उसके अंदर कोई सर्विस नहीं आ रहा है आपको, आप अपने मन से डोनेशन दे रहे हो, कोई चैरिटेबल ट्रस्ट आपको कोई सर्विस नहीं दे रहा है. These donations will not be considered as turnover in the calculation of turnover also, and it is absolutely out of it. Now here one poser would be that if the donation is made with a precondition to display name of the entity or such other services, then there might be a case that the department would come up with the option that okay, here you are receiving a supply. It becomes a sort of advertisement. Say there is a public hall. Okay, in a temple, one specific hall is there. So there I mentioned the name that okay, this hall has been donated by the it has been made out of the donation received by Hiral Shah. So in that case, maybe government would come up with a thing ki nahi, they can demand GST on it if they are able to correlate okay, this donation, this is a sort of advertisement and it is not a donation per se. It is a debatable issue. Seniors may have contradictory opinions to that also, but this is my humble opinion. Now trust providing educational services. So here we have education, we have n number of educational institutions which are run by trust. Many of the educational institutions are run by different trusts only. So if education as a part of approved vocational education course to its student or faculty or staff, it is exempt from GST. So here you have to go back to the educational services definition. If the educational services are exempt, then if that services is provided by the trust, so it is naturally it goes into the exemption category. Similarly, for healthcare services as well, you have various hospitals, various healthcare services which are provided by different charitable institutions. So even in those cases, it is you have to go to the healthcare services per se. So if the healthcare services are out of the definition of the service, it is not considered as supply, not considered as a taxable supply. So then it would not be taxable in the hands of the trust as well, whether it is an individual, a company, a trust, a cooperative society, anybody who is providing healthcare services. If it is within that ambit, within the ambit of healthcare services, then it is definitely not taxable. Then one of a very important point which generally comes in is renting out of religious place, which is very common that the presence of a temple are given for a marriage function. Okay, okay, you have a marriage function in the vicinity of the temple. Then apart from that marriage function which is happening in the open area, it is known as the Kalyan Mandapam as well. So certain rooms are also there provided as the dharamshala, as we generally say. So the law is has chalked out exemptions for it, wherein if the charitable trust rents out the religious place for general public, owned and managed by charitable trust, which is registered under 12AA of the Income Tax Act, GST will be exempted. When would it be exempted? The room rent has to be lesser than 1000 rupees a day. The words used are lesser than 1000. Better 999 is the option that you have to take. Then the open area rent is received for that as well. So that rent has to be less than 10,000 rupees a day. Plus, at times it happens with most of the temples that there are those flower shops, shops and other places which are rented out by the religious place for commercial establishment. It is not for charitable purpose, it is given to the business only. Because it is the business of the flower vendor, business of some other person. So even that renting out, if the rent received per month is less than 10,000 rupees, that would also be exempted from payment of GST. So renting out of religious place is also there. Then there are public libraries. See, there are basically the libraries, you can categorize it into two parts: a public library and a not a public, a private library. So if it is a public library which remains open to all, and if it caters to educational, informational and recreational needs of its users, and the finance of such library can be provided from donation, subscription and from special fund created for this purpose, or from combination of all sources, it will be called as the public library and no GST will be applicable on such service. However, if there is a restriction on the use of the library, so then it will be considered as a private library, and private services by a private library will not be exempt. So that bifurcation, the thin line of bifurcation between public library and private library has to be considered. Then one last aspect which I would like to highlight in case of charitable trust is arranging yatras. Now there are yatras arranged by various, say in the month of April. Now due to the festive season, yatras are taken to Shirdi Sai Baba's place. There are yatras going on. There are different yatras which are organized by different charitable trusts. However, only such services of religious pilgrimage as are provided by Kumaon Mandal Vikas Nigam Limited or Hajj Committee of India or State Hajj Committee constituted under the Hajj Committee Act 2002 in respect of a religious pilgrimage facilitated by the Government of India under bilateral agreement are exempt from GST. What is the bilateral agreement? There are agreements between different countries. Like for Hajj Yatra, we have an agreement for uh, Kailash Mansarovar Yatra with the government of China. So such bilateral agreements are there, and only these yatras, not every yatra, only these yatras, say when amount is recovered from the participants, from the general public, then in these cases it is exempt. Generally what happens in yatras is it is open to all. Okay, nobody is supposed to pay anything for the yatra, and yatra is conducted by the charitable trust, so there is no consideration. When there is no consideration, there is no question of charging of GST. However, in case of Hajj and this Kailash Mansarovar Yatra, you have the participants, the person who are interested in uh, conducting, in attending these yatras, have to pay an amount towards enrollment. So if they are under this Kumaon Vikas Mandal Nigam Limited or Hajj Committee, then that amount is also not chargeable to GST. It is exempt from GST. So with this, my portion of charitable trust per se has been completed. I highlighted the various points which I felt are more relevant for for generally the charitable trusts. Even in case there are other points, we would be happy to discuss. But let me complete this cooperative society also. So cooperative housing society, again, as I said, for ARs, for Rotary Club and Lions Club, like that. Here, the first point, which is always highlighted on the front page of the newspaper, we get receiving WhatsApp. Impact of now GST is not chargeable on the activities of a cooperative society. Society में कोई tax नहीं लगेगा. So people start posting, अरे Hiral bhai, whether we have to charge or not. Now the judgment has come, Supreme Court judgment has come, now nothing can happen. But mind as well, that was the judgment under the service tax arena. Now as far as GST era is considered, till some matter goes up to the Supreme Court in the GST era, I would say GST should be charged by the cooperative society. It is a personal view that GST has to be charged. How GST has to be charged, we will come across. So my further analysis would be based on the assumption that the judgment of Calcutta Club Limited does not hold good under GST. If we start discussing about the Calcutta Club judgment, I would say 3 to 4 hours would be even less if we go into that discussion. So I'm avoiding that and proceeding further. Now, apart from the definitions that we studied earlier, the definitions of person, definition of business, definition of consideration, supply, here you have to consider an additional definition of housing society, which is defined under section 2 subsection section 16 of the Maharashtra Cooperative Housing Societies Act 1960. Why do we need to study the definition of a housing society? The basic reason being all the further discussion is with respect to a housing society, and it does not in any way impact other than or a residential welfare association, which is known as RWA. Apart from these two, the discussion is not there. If it is a commercial society, which most of our offices are in commercial societies, so you have huge entire commercial society there. It is absolutely the discussion which is held further for the exemption and stuff which is given, it is for a housing society, not for a commercial society. So that has to be considered. Now registration. Who has to get himself registered? As we saw in charitable trust, okay, registered under 12AA of the Act, and plus other exemption was there. Similarly here, the it is liable to registration if it exceeds the turnover of 20 lakhs in and 10 lakhs in specified category states. If the total amount of the aggregate turnover exceeds the amount, then the registration is applicable. And see, it is very clear that it is and, it is not or. This is condition one, that okay, it exceeds 20 lakh rupees. And the second point is contribution per member. A housing society is liable to register if the monthly contribution per month per member exceeds 7,500 rupees. See, earlier before 25th January 2018, the limit was 5,000 rupees. Now it has gone up to 7,500 rupees. So it is monthly contribution per member per month. Again, one word which I have missed here is for common services. See, it is every time in each of the circular, as wherever explanations or anything is provided, it is very clear they say 7,500 for common services. Now, it would be controversial to say ki okay, if it is non-common services, then this 7,500 does not come into picture. I would say yes, my reading of the law clearly says that if it is not a common service, which is a common and uncommon service, we will come down to that later, but uh, my reading of the law says that if it is a non-common service, then yes, you will have to register. Then the 7,500 limit would not come into picture. What are the inclusions and exclusions for calculation of the 7,500 or erstwhile 5,000 limit? See, first and foremost, what are the general items which we consider in calculation of which is there in our monthly maintenance bill in case of a cooperative society? It is generally the property tax which the municipal corporation, may it be Kalyan Dombivli Municipal Corporation or MCGM Mumbai or any municipal corporation or anybody, property tax is charged, water charges, municipal tax. Now in Mumbai we have a big patch which is there under the control of the Bombay Port Trust, BPT. So BPT charges them. So BPT charges the amount to the society, the municipal corporation charges to the society. And what does the society do? It is a pure agency transaction wherein when the bill is raised, okay, this is the property tax. Property tax is allocated between different residential units, so it is a pure agency. Okay, water charges, so water charges are allocated, so it is pure agency. It is then considered that society is a pure agent of the government or semi-government authority, therefore it is excluded from the calculation of 7,500. Now, repairs and maintenance charges, electricity for common use, common service charges. See, these are the charges for the common area or for the repairs and maintenance of the building or the society, the compound wall, the ground, etc. So these are included within the limit of 7,500. That is the common service charges. Whatever is common, those are included in 7,500. Now, apart from these, there are other inflows for the society which are there. Say I have given my place on rent to somebody else, so society recovers non-occupancy charges, from me. It is not common for the entire society. It is just specific to me if I have given my residential premises on rent to somebody. So that non-occupancy charges is not a common charge. Things like parking charges. Okay, I have two cars. I have parked it in the society. My neighbor does not have any car, so he does not pay any parking charges. I pay for the parking charges. So again, it is not common. It is not allocated in the manner. Okay, all the residential premise holders have to pay parking charges, whether or not they park their cars. No, somebody might not be having a car. Somebody has one car. Somebody has two cars. So it depends. So it is not common. So it is not to be considered for the calculation of 7,500. Certain use of clubhouses. I have a swimming pool in my society. So that swimming pool, it has the okay. If my guest comes, he can pay 100 rupees as club charges and use the swimming pool or the gym or any activities for say stipulated time of 2 hours. That is again a non-common activity. It has to be considered for the charging of GST. It is not included in that 7,500. Whether or not it is collected across the counter or it is charged at the end of the month in the bill, anything it is, but it is not to be considered for 7,500. Then some of the other incomes, the inflows for the society are renting of a hoarding, which is at the on the wall or on the terrace, mobile towers. All those rents are huge. So again, those have to be considered. And if that rent is received, you have to consider it for GST purpose. Then at times there are common spaces. Say your clubhouse has been given towards the marriage function of some XYZ person. So even if that is given accordingly, that is chargeable to GST. It is not common purpose and chargeable to GST. So I have just given a tabular representation of the different scenarios wherein whether those would be considered, whether that would be exempt from tax or not. I would skip this due to paucity of time. However, this presentation would be mailed to you all, and it is just a concise presentation of what I have. Sure, let me consider. I'll just take 2 minutes for completing the scenarios as well. Now, repairs and maintenance charge, okay, if it is 7,200, 7,200 is below 7,500, so it goes out. In scenario B, repairs and maintenance 7,200, water charges 500, so 7,700. It is going above 7,500. However, 500 rupees is pure agents in term as good as pure agency charges, so that is out of calculation. So you're left with 7,200, which is below 7,500. So again, it is non-taxable. So GST would not be required to be charged. Now again, we are keeping the repairs and maintenance amount as 7,200 only. Now going further, okay, 500 was the water charge. Now 500 is towards contribution to sinking fund. Now again, there is a contribution. There are contradictory views with respect to contribution to sinking fund as well. Some people say ki, okay, it is a sinking fund, it is taken for a specific purpose, it is going to be utilized for that purpose only, therefore it is not taxable at this point of time. I beg to differ to that opinion. My logic therein being that okay, that amount is taken, that is just a different form of taking the repairs and maintenance, a different heading given, which is going okay, say sinking fund for repairs of the building, for some major repairs, an amount is taken, so that is in a sense a part of repairs and maintenance only, though it is kept in a separate account. For Cooperative Housing Society Act or for Income Tax Act, it might be considered different, but in my opinion, it would not be considered any different for the GST Act purpose. So here, your repairs and maintenance for so this repairs and maintenance 7,200, 500 water charge, contribution to sinking fund 500, you come with 8,200. Out of this 8,200, this 500 will go to the non-taxable category. So you are left with 7,700. That is a total of 7,200 and 500. So that would go into the taxable portion. Now, earlier there was a confusion wherein government had given those flyers, wherein it had said that if it is 7,700, so 7,500 would be exempt and you have to pay GST on 200 rupees. That was the flyer, which was incorrect. That position has been clarified by the department themselves by way of a circular wherein a proper example has been provided, that it would not be 7,700 minus 7,500. It would be that entire 7,700 would be taxable. So that is this portion. Now scenario D, wherein okay, the same water charges, same sinking fund. Here parking charges. Parking charges are in any case not eligible for that 7,500 exemption. It is not, so it directly goes into the taxable portion. This 500 directly comes here. Your eligibility 7,700 is what I'm considering, this 7,200 plus this 500. Water charges are out as discussed, so your taxable amount would come to 8,200. Considering scenario E, same thing. Now we are adding clubhouse charges as well. Clubhouse charges here, I'm assuming that it is not for the common use, it is for some specific use. So then this parking and this clubhouse charges are directly imported over here and they are not being considered above. I would like to correct myself. This 500 I'm considering as common use only. So you have this 8,200 over here and just this parking charges go directly over here. In scenario F, we are eliminating other parts as which has already scenario F, scenario G, H, and I are already considered erstwhile. So we are not going into it. Sorry, scenario G, 7,200 is your repairs and maintenance. 500 is a non-common charge. So you will get an exemption for this 7,200, not for this 500 rupees. On 500, it will become taxable. 7,200 would be out of it. So this item is very important that we need to consider, that it is not that in general we start speaking 7,500 no need to register, nobody is paying, even though our collection is very huge, but it is not getting triggered, so we are out of it. Please don't consider it that way. What happens many a times, it so happens that there is some major repairs. Say today there is a major repair in my building wherein everybody has to contribute a lakh of rupees. So that lakh of rupees, when it comes in, okay, there are only say 20 houses and a lakh of rupees is coming in towards repairs and maintenance. It is very specific. You say it as sinking fund or you say it as any fund, but it is for the repairs. So a lakh of rupees is coming in. So this 7,500 is triggered once. It is triggered in this month. So I'm eligible to register because both the conditions are satisfied. 20 lakhs is also satisfied. as well as there is only one activity. Normally my maintenance is just 5,000 rupees. However, it is one specific event wherein it is going above 7,500. So registration has to be taken and all these charging has to be done. So we have to be very, very careful at the time of uh, certain activities, like some major repairs are going to be carried on at that point of time. Then we have I have taken it is so for registration, let's in quick 5 minutes we'll just take few scenarios wherein registration has to be taken or it does not have to be taken. We will deal with that. Say ABC Society, contribution per month per member is 4,500 rupees. So, and there are 425 members. So the total contribution will come to 19 lakhs per person. It is below 7,500. So there is nothing, and we consider that there is no other income. So your total receipts 19 lakhs 12,500, which is below 20 lakh rupees. So your scenario one, scenario two, both are out of it. Therefore, no need to get oneself registered. Now let's take a bit of a complex situation wherein there is a society wherein the contribution per month per member is 7,550 rupees. That is above 7,500. So okay, we are this condition is getting satisfied 7,550. So it is above 7,500. However, the number total contribution from its members is, there are 225 members. So let's take the contribution per annum is coming to 16 lakh 98,750. So again, that is also below 20 lakhs. Say 17 lakhs is the receipts. Okay, this condition is satisfied, but this condition is not satisfied. However, there is renting of a terrace. Okay, there is a function in the terrace, or some mobile tower is there, wherein 5 lakh rupees has been received by the society. So your 17 lakhs as contribution from members and 5 lakh rupees as this rental income. So your total would become 22 lakh rupees, 22 lakhs. Therefore, it is, this condition is also satisfied. This condition is also satisfied. Considering both the conditions, registration has to be taken and GST would have to be charged thereon. So we have to be very careful with respect to registration. We cannot take a very lenient stand. No, at times it happens. While after I published this impact on GST laws on cooperative housing society, which was published by the GST Practitioner Association of Maharashtra, so people came up, अरे सर इसके अंदर क्या है, हमने तो हमारे बिल्डिंग में ही एक सीए हैं, उनको पूछा था कि जीएसटी रजिस्ट्रेशन लेना है क्या, उन्होंने बोला नहीं 7,500 नहीं होता है ना, तो रजिस्ट्रेशन लेने की कोई जरूरत नहीं है, अब छोड़ दो. Such understanding, what happens is we are not reading the law per se, and just a passing remark, then everybody is intelligent in their own wits. अरे नहीं वो व्हाट्सएप में आया था, रजिस्ट्रेशन नहीं करवाना है, हमारा कंट्रीब्यूशन जीएसटी नहीं चार्ज करना है. That is wrong. What happens is the liability, say in case of Calcutta Club and in many other cases, what had happened was, at times they charged the service tax in the earlier arena from the members, paid it to the government. Later on, that was paid in protest. Then the litigation was filed, and subsequently the amount can be refunded back, it can be collected back. However, if it goes against the society, the problem would come to that the office bearers, uh, the office bearers themselves would be liable for the penalty, and it becomes a major problem. The penalties are also huge. Penalty for non-registration, then you have not registered, therefore you have not maintained proper records as per GST Act, not issued proper invoices, all the penalties put together, it would bring a lot of turbulence to the society and to the office bearers themselves. Now, the input tax credit, the mechanism for input tax credit is as good as any other GST supply of services, as any other businesses. So that can be taken care of. The conditions are also the same as it is. So I'm not emphasizing it over here. We are concentrating more on the different aspects which are different for a cooperative housing society or a residential welfare association. Reverse charge mechanism, yes, reverse charge mechanism is also to be considered. One aspect which societies tend to miss is the security charges. From 1st January, there is this amendment that when security charges are paid to other than a company or a firm, then those security charges, if the security agency, say a proprietorship security agency, is not registered under GST, it is not charging GST to the society, then those security charges are also liable for reverse charge. So generally, though we have one same couple of watchmen who are there, okay, day shift, night shift, they are as good as the society. They are only for the society. Still, there is a mukadam to whom the security charges are paid. So those would be considered under reverse charge mechanism. That has to be considered. And yes, advocate fees are have always been there under reverse charge mechanism. Composition scheme, yes, the scheme is there for service providers, which is available from 1st April 2019. Last year, for service providers it was also added, and housing society or a residential welfare association would fall into the service provider category, and they would be eligible to opt for composition scheme. This scheme is for service providers, and the option is on the taxpayer. If the turnover is up to 50 lakh rupees, it is up to the taxpayer. Under if they want to opt, the society wants to opt for a composition scheme, they can opt for it. Your return filing due dates, those are the same, 3 in the staggered manner, GSTR1, etc. Maintenance books, same. Retention of books of accounts, same. Consequences, again, the consequences are very much there as a normal business entity. Your GST invoice should contain those same basic items which are there for the other businesses who are supplying under GST. I had to rush up in between, but I would have the floor open for queries if there are any.
Uh, yes, Hiral bhai, a very wonderful session. I have many questions lined up for you. Okay,
Yes, sir, please.
so the first question comes here is the legality of AAR advance ruling is not final, but
Huh.
importantly, clubs would not be keen to know whether services provided to their members would attract the definition of supply under Section 7 of GST Act. Using the logic of the Calcutta Club Supreme Court decisions, the answer would be probably no, as the taxman should not separate the club from its member. Your views on this, please.
Sir, I would say I would at a point of time agree with the gentleman as well. Okay, that it cannot be members and the club are one and the same. However, as I said, if we start deliberating on the Calcutta Club judgment, it would there would be no end to it. But I would just like to point out on the definition of business, that is section 2, subsection 17 of the CGST Act, the clause E, provision by a club, association, society, or any such body for a subscription or any other consideration of the facility or benefits to its members. The definition in itself, it is taking that, okay, this is business. Now, if it is defined under the act that it is business, then we'll have to wait for some ruling under the GST Act to come in before we take such a stand. I would not say that okay, Calcutta Club judgment is correct, incorrect, but it is with respect to the service tax law and not the GST law.
Okay. The next question is, if donations are not taxable or no supply, then will Rule 42 become applicable for reverse of common ITC ready under Section 17, read with Section 17?
In my opinion, it would not come into picture, because here the donation would be in the form of just the receipts. It is not with relation to the service, with relation to the supply. Therefore, I don't think so that proportionate reduction would be warranted.
Okay. So next is whether earmarked donations received by eligible trusts are likely to be considered to be liable for GST.
Sir, earmarked donation or any donation, if it it is donation per se, even if it is given for a specific purpose. See, you are when I took that query for a donation, that having the nameplate. So if such a thing happens, then maybe the taxman would consider it as ki nahi, I'm taking this as advertisement. But if it is an earmark donation, it is donation per se. Therefore, I don't think so. It should be taxable. Should not be taxable.
Oh, okay. The next is, ours is a charitable trust under Section 12AA, not a religious trust. We have rented a building to a bank. Is it exempted under GST? The rent is 4,000 per month.
Okay. Fine. So if it is 4,000 per month, so it is very clear. It is that the limit is 10,000 per month for any businesses. So here it would be exempt from tax, not chargeable to tax, not chargeable to GST.
Okay, thanks. The next is religious dharamshala trusts provide food to pilgrims or visitors and collects nominal amounts from them. Will it be liable to GST?
Yes, sir. It would be liable to GST, because
So,
it does not fall into any of the exemptions or any kind of concessions which are given. So food would be chargeable.
okay. Next is 12A registered public charitable trust is having donations, government grants, interest, and also fees for running school as income, besides being income from pharmacy.
Okay.
Trust is running a CHC in PPP model.
Okay.
The total income exceeds 20 lakhs per annum, including 4 lakhs income from sale of medicines.
Okay.
Whether the trust is liable to pay GST on sale of pharmacy, whether
Yes.
the trust under the circumstances to get registered under GST.
Look, sir, the sale of pharmacy here, it is activity wise. GST Act per se, it is based on the concept of supply. So, what is the activity that you are taking into consideration? For charitable trust, that exemption has been provided. Okay, if it is a charitable trust, then certain activities we are exempted. Here, even if it is a charitable trust, but supply of medicines, sale of medicines is not an exempt service. It is not an exempt supply. Sorry for using the incorrect word. The correct word is supply. The supply of medicines worth rupees 4 lakhs is a supply which is chargeable to tax. Therefore, you have to charge tax thereon. You cannot take the garb of a charitable trust or anything and ask for exemption. The supply per se of medicines is chargeable to tax, and you will have to charge tax thereon. If your the gross receipts is exceeding 20 lakhs, uh, which is within the definition of receipts, then yes, you will have to get yourself also registered if it is going above 20 lakh rupees. So now, one of the point maybe what I am able to foresee is whether you are taking it as goods or services. There are certain services and there is sale of pharmacy which is sale of goods. So you have to consider the limit of 40 lakhs or 20 lakhs. So that is a point which remains. In my opinion, you better take the thing for 20 lakh rupees limit and go in for registration.
Okay, the next question is ATG Trust has given its premises on rent to bank, and bank
Hmm.
is paying GST on the rent on reverse charge. Beside,
Okay.
it is giving rooms on rent below 1,000 per day and marriage hall below 10,000 per function. Whether it
Okay.
is correct or else whether the trust is liable to get registered under GST and pay GST.
Okay, here I presume that even that the rent from the bank is below 10,000 rupees. So if your room rent below 1,000 rupees, your premises the rent below 10,000 rupees, and the rent from the bank again that is also below 10,000 rupees, then you need not register under GST. However, if what you are getting, because see there are n number of places which I have seen, the bank is paying 2 lakh rupees rent, 3 lakh rupees rent for the premises. So currently the bank may say, okay, we are paying on reverse charge, you need not register. No, that is not the correct position. If it is above 10,000 rupees, then you have to register. If those conditions are not fulfilled, then you have to register and pay on forward charge on your normal supply. If it is below 10,000 rupees, it's okay. You need not do anything. Whether they pay it on reverse charge or don't pay it on reverse charge, that is none of your problem.
Yeah.
See,
So the next question is with respect to the limit of 7,500, if the
hmm,
contribution is lump sum and category wise, whether the 7,500 limit becomes applicable as one cannot bifurcate the common or not. Second, what if the annual contribution collects should be divided by 12?
Okay. See, it is what they have mentioned is 7,000. First, let me answer the second question first. They have said 7,500 per month. So it does not make any difference. Okay. There are societies which are collecting it on quarterly basis, 6 monthly basis, annual basis. So it's okay even if you collect on annual basis, and if it is going above 7,500 rupees, you calculate per month. Say it is you are collecting 60,000 rupees annually. So your per month contribution is just 5,000 rupees. So you need not worry about it. So you can comfortably divide it on per month basis. But if it is for your routine maintenance, now if it is lump sum, as question, okay, there is a major maintenance, some major work which is going to be carried out. So at that point of time, when you say, okay, this is a major activity, major repairs fund or major repairs or anything, you normally issue invoices on month to month basis. But here, this you are saying, okay, 60,000 rupees, you have to pay lump sum, and then the 60,000 you want to divide it by 12 months. I don't think so that is allowed. Such tax planning, in my opinion, is not something which is advisable and which is not something which is correct. So if it is okay, you collect annual maintenance charge, that is absolutely fine. Once only per annum, that is fine. You can divide it by 12. But this some major repair in the garb of dividing it by 12 and allocating it to per month basis, I don't think so that is justifiable.
Okay. The next is there are certain real estate developers which collect the maintenance charges for n number of years, let's say 5 years,
Hmm.
along with the price of the flat. If
Correct.
this sum is collected before GST was applicable, but
Hmm.
some part of the period of 5 years falls under the GST era,
Okay.
will GST apply? If so, how will be the computation?
Okay. So they would the consideration has been paid much before GST. So that ways. So in this case, we will have to look into the aspect. Just a second. Okay, if the real estate developer now starts charging GST, I think he would be justifiable in it in collecting the GST portion if he has kept allocated the amount accordingly and has not charged service tax earlier. Otherwise, it would become unjust enrichment. So the real estate developer would be justified in collecting GST. However, um, certain aspects have to be considered as there should not be any unjust enrichment by the developer, and there is no double collection of tax.
Okay. So next is the cooperating housing society has a maintenance below 7,500 per month per member.
Okay.
However, they recently collected 10,000 per member for some repair and maintenance, shed work.
Okay.
Okay, is GST to be taken? If yes, then can GST be surrendered subsequently?
Yes, definitely. Again, your answer to both your questions is yes. GST registration has to be taken because it is going above 7,500, and later on in the subsequent period, when you feel okay, GST is no more applicable now, you can surrender the registration. That is possible.
Yeah. Okay. Next is if I spend 50 lakhs for purchase of a new lift, whether I
Okay.
need to take GST registration. Otherwise, I'm not crossing 20 lakhs and others the other criteria of 7,500. So it's an
Okay.
expense of 50 lakhs for the new maintenance.
Sir, see, when you are purchasing a lift, you are not supplying any service. Your lift contractor, the person who is supplying lift to you, you have to look at their registration. You are not bothered with whether it is a 50 lakh lift or anything. So, absolutely, there is no question of you getting registered if the other aspects are not triggered. It is upon the opposite party.
Yeah.
So,
The
50
next is
lakhs lift does not have any relevance for your registration. Yes, sir.
yes. Next is a religious charitable trust running temple collects
Hmm.
charges for various religious prayers, which covers priest salaries, fruits, flowers, and other admin cost. Is this
Okay.
charge exempt from GST?
No, they are taxable. Now depends upon the item. Say for example, you are talking about fresh flowers, you are talking about fruits. So those items are exempt per se. But if it is you are providing some prasad and which is a taxable commodity, then GST has to be charged thereon. There is no exemption which is provided in any manner. As I said earlier, also that the food is given to the yatris. Similarly, here prasad also given is, and on the prasad, same thing. What happens in many of the temples, you have this. Okay, this prasad tokri, 50 rupees for this prasad tokri. Yes, that 50 rupees, if it is a prasad tokri which is sold, consideration is taken there for that, then it is chargeable under GST. There is no exemption for that.
Okay. The next is AOP is formed of three societies and his income is taxable and his income are taxable income of 12 lakhs, badminton, swimming, etc. And bank interest of 21 lakhs.
Okay.
Members contribution from members is 24 lakhs. Whether GST is
Okay.
applicable, do we need to take GST registration? Three society pay GST on contribution from its members.
Hmm.
Yeah, that's the
Uh,
question.
what I, what I understand from the query is that the querist wants to ask that the AOP. you have these kind of society that it is a three building society, and there is another apex society which takes care of the say common amenities like swimming pool, gym, and all those things, common amenities. So if that apex society also has income which is above 20, has received above 20 lakh rupees, then and now who are the members of the apex society? The members of the apex society can be the three societies, or it can be the individual members themselves also. So if it is, if the condition is for the apex society also 20 lakhs is getting crossed plus 7,500 is getting crossed, then yes, the apex society also has to take the registration, even though the separate societies are charging to their members.
Okay. Next is whether society needs to take registration under section 24, irrespective of the thresholds due to security services under section 9, subsection 3.
There are divided opinions for this. My opinion stands as you have to get yourself registered, even for the security services under reverse charge, to be paid on reverse charge. However, many seniors are of the opinion, which is contradicting to my opinion, that you need not register yourself. Now, that is one of the call that you would have to take, because in my opinion there is no such exemption which is provided. You don't have to get yourself registered if it is a society. It is any person has to get himself registered if the tax has to be paid on reverse charge basis. So in my humble opinion, you have to get yourself registered, even for that security charges reverse charge mechanism. Yes,
Okay.
sir.
Next is in case of security charges, though it
Hmm.
is under RCM, but still the security provider is charging GST. So what is to
Hmm.
be done for that?
If the security provider is charging GST on a normal basis, then I don't think so. You have to charge any GST there on reverse charge basis.
Okay. Next is, does blood bank require to get GST registration?
No, in my opinion, no.
Can a blood bank claim ITC for GST for capital goods purchase? If they're not registered, then no question of that.
No. Uh, Under it is claiming an exemption under the healthcare services, the blood bank. Therefore, the question of input tax credit would not come.
Okay. If a cooperative housing society is not registered in GST and pays RCM on security charges or advocate fees, then it is a loss. It won't be
Yes,
able
sir.
to take ITC.
Yes, sir. It is a loss.
Okay.
You cannot do
The
anything
next
about it.
question,
It is
anything about, yeah. Next is certain society is artificially bifurcating electricity charges, water charges along with property taxes. Will it be okay? And the said amount would be excluded from 7,000 limit being pure agent.
sir. See, if those water charges if you have certain working for distribution of that water charges per unit, per residential unit, then the thing would be that no registration, it would qualify for that 7,500. However, electricity for common areas, for common amenities, that artificial bifurcation would also not be correct. But
Okay.
yes, you can you can bifurcate the water charges, but you have to have a perfect mechanism thereof, which can be proved easily.
Okay. The next is suppose Lions Club has a medical center and provides a service of pathology lab and OPD for various diseases against some charges. Would
Okay.
Whether it would be exempt for GST?
Sir, see, healthcare at clinical establishment, uh, ha, by an authorized medical professional or paramedics are exempt. So healthcare services here, uh, whatever the form of organization is, the trust, it is running a clinical establishment. So and it is providing those active, it is having those activities which are exempt from tax. And if they are exempt from tax, there is no question whether it is a trust or it is a company or anybody, GST has not to be charged thereon. The OPD also would not be chargeable to tax.
Okay. The second last question is contributions are collected monthly, but there's no specific under under any specific head such as repairs, water charges, or property tax.
Okay.
Whether still the limit of 7,500 per month becomes applicable.
If you do not have any bifurcation, but you are charging it the same amount, same 7,000 rupees to everybody, all the members, as repairs and maintenance, just maintenance charge. You just say it as maintenance charge. सब लोगों को 7,000 रुपया maintenance charge भरना है. तो it goes under the 7,500 exemption because it is considered that it is common to everybody. And if it is common to everybody, even though no bifurcation is provided, it is termed as maintenance per se, and that would have the advantage of 7,500 limit.
Okay. So the last question is, if a society takes a loan from a bank for major repairs and then recovers the amount of loan from members over a period of time, if the installment is more than 7,500 and the total more than 20 lakhs, will whether GST will apply?
Sir, could you please repeat the query?
Yeah. If a society takes a loan from a bank
Okay.
for major repairs
Okay.
and then recovers the amount of loan from members over a period of time, and the installment is more than 7,500 and the total collection is more than 20 lakhs, whether GST will apply?
Sir, see here, your activity, whether you have taken the loan from a bank and you are collecting it for that purpose, your purpose here, it would be considered as this society is taking some form of maintenance charges from its members. Now that maintenance charge which is taken, say 10,000 rupees per month, that is okay. You are going to utilize it towards payment of the loan principal or interest or whatever for the loan EMI. So your outflow would not have any relevance to your inflow. Your inflow would be your repairs and maintenance charges only, and you that would be liable for registration definitely. You wouldn't have, you cannot claim any advantage from it. So you will
Yeah.
have to the registration.
Okay. So I think Hiral bhai, you have very well addressed all the queries, and I hope all the queries of all the participants have been resolved, and it was a worth attending the session, though it got extended, but it was worth the time that we have all spent today with one of the very good learned speakers, Shri Pankaj bhai and Shri Hiral Shah. So on behalf of GSTPAM as well as on behalf of our friends Anurag and Vipul, I offer a very hearty vote of thanks, Hiral bhai and Pankaj bhai, for taking out your time. So we will share the videos as well as the PPT with all of the members in couple of days. Thank you so much, Hiral bhai. Thank you so much. Thank you everyone. Have a great day and be safe. Thank you so much.